Welcome back to another installment of Retirement and Estate Planning 101. I'm Mac Graham, the owner of Klein Financial, and today we're talking about TFSAs. So what is a TFSA? Well, a TFSA is just a four-letter acronym that's short for Tax-Free Savings Account. It's another form of government-registered investing, very similar to the RRSP with one major difference. Now, before I go further, if you don't know what an RRSP is, head back to the previous video that I did on RSPs and learn more, and then come back to this one. But today, when we're talking about the TFSA, the big benefit, the big advantage to a tax-free savings account is the government of Canada says for every dollar you invest into a tax-free savings account, they promise to never tax you again on any of the interest or gains that you receive inside of that investment. This is a huge benefit, ladies and gentlemen. It's something I think every Canadian should take advantage of. Now, the reason I brought it up today is it was just announced this week that the government has increased the contributions for 2021 by $6,000 to a maximum of $75,500. Okay? Now, if you are one of the few people that were able to invest $69,500 as of last year, for starters, I want to say congratulations to you. You're one of only 10% of all the people in the country that are able to do that. But if you have, you should know that as of January 1, you can invest an additional $6,000 into your tax-free savings. Now, another thing that I really wanted to talk about today is something I see a lot in my business that I want you to avoid is I want you to avoid the pitfalls of investing in tax-free savings accounts or not taking full advantage of this gift that the government's giving us. Because you see, something that I run into quite a bit is I see a lot of people that have tax-free savings accounts, heavily invested tax-free savings accounts, but they're put into savings accounts. And if you go out there and you look at all the interest rates right now at all the major banks and even some of the high interest savings accounts that are out there, you're going to see that pretty much the best rate going on a savings account is about 0.1% right now. So if I put this into a real example, let's say you're one of those people who was able to make the maximum contribution of $69,500 into their tax-free savings account as of last year. But you've got it solely in a high interest savings account earning 0.1% interest. What that means is after this full year of investing is over and we get to December 31st of 2020, you're going to have earned a maximum of $69.50. And the tax savings that you're going to receive on that $69.50 is about $17. Now, why do people do this? Well, I personally think that regardless of whether you're conservative or not, I think a lot of people just put their money into a tax-free savings account because the name savings account it's right in the name. But really, the government of Canada doesn't put that limitation on you. They say that you can put this money into any type of investment you want, paper investment, I should say. So you can put this into those savings accounts, but you can also put it into GICs, you can put it into mutual funds, you can put it into segregated funds, or you could invest it into stocks. You really have all these options, most of which can produce a much better rate of return than, say, 0.1%. So to keep it in perspective and to use that same example, if you were to come and see me and we were to invest your money into a segregated fund balanced portfolio, and we were able to use that $69,500, pardon me, I should say, and we invested that into a balanced portfolio. At the end of the year, if we earned, let's say we earned 7%, we had a good year, not great, but a good year, we earned 7%, we would have received by the end of the year, let me just look, $5,024.16. And the tax savings would have been $1,256 saved. So, to me, that's pretty simple, but I'm going to let you choose. What would you rather see? Would you rather save $17 in taxes and have earned $69.50? Or would you rather make $5,024 and receive $1,250? Would you like to say the choice is really up to you? But I personally just think if you're going to put your money somewhere where you're not going to receive any sort of rate of return, the tax-free savings account is just not the best place to do it. You might as well leave that as non-registered income and save that tax-free savings space for some of your more aggressive investments. Now, if this is confusing or if you have any questions about this, please give me a call. I'm happy to talk about it more with all of you. My number is 519-721-7254. But those are the basic ins and outs of tax-free savings accounts, or TFSAs. And I hope you've enjoyed this, and please stay tuned for another installment of Retirement and Estate Planning Made Easy. Have a great day.